welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, our latest offering that focuses on the biggest buzz on the D Street. And the biggest news that we are tracking is the big announcement made by US President Donald Trump last night, saying that US-India have finally signed a trade deal and he is going to be cutting the tariff rates on Indian exports from 25% to 18%, as well as scrapping the additional 25% punitive duty as well. Minutes after that, Prime Minister Narendra Modi also said that the Indian exports will usually benefit from the 18% tariffs. This also makes us competitive in respect to our neighboring nations that have slightly higher tariffs than us. Also, he has thanked US President Donald Trump on behalf of 1.4 billion people of India. Let's actually welcome both our guests today to help us decode what this announcement really means. How much of a benefit will this come in for the export-oriented sectors in India? What does it mean for our macro economy? And of course, we will try to understand in terms of investment opportunities, how should you be scouting that in the Indian markets today? Let's welcome both our guests right now. We have Mr. Karan Basin joining in, our economist who's been tracking this very, very closely. Also, we have Prashanth Tapase from Mehta Equities, our market expert of the day. Warm welcome to both of you. Thank you so much for taking the time out. Karan, to you first. At the face value, this 18% reduced tariff, how would you really look at it? Is it like a big diplomatic win for India, or economically also, is it a big news for us?
I think in terms of the economics of it, I'm very happy. If you were asking me this question 2 days ago, I would have said, if you could get to 25%, that's good enough for me. I would be super happy, because even at 25%, all's not lost. We can tide over. Our firms can be a little bit of competitive. Have some competitive spirit. We could give them some support in the form of subsidy or whatnot. Right? 18% is just unexpected, because no other competitor of ours has 18%. So that's one. Second, the way our currency has moved over the last year, that's another additional advantage that we have over our competitors. So when I'm looking at the numbers, I see no reason why our exporters should be really happy with this outcome. And this year, the new financial year would of course be probably the most profitable year for many of our firms. And the thing to keep in mind is that the next year would be even better, because I expect the India-Europe deal to also be ratified sometime by the end of this year, which would again mean that it would come into effect hopefully by the end of this financial year. So I think we just created a much more smoother path to Viksit Bharat. That's what this deal has done for us.
Okay. Karan, help us understand, is this a blanket tariff reduction across Indian exports, or should we read this as a sector specific or a selective move for so far? And yet, we are awaiting the fine print. Are you waiting for that too? And only then will things get clarified there?
So let me kind of clarify. I think two sectors that I closely track, which are kind of the future of Indian manufacturing, pharma and electronics, semiconductors and stuff like that, those were anyway exempt to a large extent, either in terms of company specific exemptions, or because of those being treated as like slightly differently than rest of the economy. So for those, it doesn't change anything, because they were anyway benefiting from across the board zero tariffs, right? So those sectors are separate. Now then comes the issue of automobile component manufacturers. I guess they may also not be included in this 18%. So for them, it would be a different story. There are some reports that suggest that about a tenth of our total exports would be left out of this. So if 90% of our export goods are included in this 18%, I would be very happy. As I said, at 25, I was okay with 25. I felt that maybe that's the best that we could have gotten. 18 is just a sweet surprise. And within a month, I'm seeing my own sense of optimism about the economy. It's just changed completely. 2-3 days ago, even after the India-Europe deal, there were reasons to be concerned about our currency situation, with the slide in the rupee and where it would eventually stop and stabilize. I think a lot of those concerns are now just out. I mean, I don't even think about them. I'm just thinking, okay, so we've got this deal. What are some of the areas where we have reduced our tariffs? And mind you, I'm a big believer that we do need to reduce our tariffs, irrespective of whether we want a deal or not. So, in my mind, the reason why private investment in India is low has everything to do with the fact that we are very protectionist as an economy, and the incumbents therefore don't feel the need to invest. So, irrespective of this deal, as long as we are reducing our tariffs, I think I'm happy. So would be very interesting to see what are some of the sectors where the government has in fact committed to reduce tariffs. I would also say that if you look at the last 6 months, we've been on a very nice path of reform. It's a very nice journey because we have liberalized a lot of sectors that we never thought we would, insurance being one of those. Even nuclear power to a large extent has witnessed some form of reforms. So I would kind of say that we are on the right path. This is the path that would eventually take us to a high income country status. My hope is that this deal would not derail that process, because a lot of these reforms were done only after we had a 50% tariff. So once there's a gun to our head, we do all the reforms. Now that that gun is no longer on our head, I hope we still continue to do the hard stuff that we anyway have to do, and I hope that we don't slow on that.
Fantastic. Let me just bring in Prashanth for a moment. Prashanth, we had a gap up start to the Indian equity markets, celebrations across the board on especially the export-oriented sectors, textile stocks jumping up 20% or so. We're seeing chemical stocks, the frozen foods exports, as well as some gems and jewellery names, and even IT names for that matter, doing very well this morning. First up, this has been a big overhang being lifted from the Indian equity markets. This was the biggest overhang that the markets were holding onto, that till this time the deal really happens, markets were directionless. How would you look at the markets? Where do you see the markets going from here on now?
I think good morning, Sakshi and Karan. So I hope you remember last week we had a discussion with respect to markets are waiting for the father of the deal. So when we completed the mother of all the deals, there was a weight overhang on the father of the deal. So I think that's now over. The way markets have opened today, I think it's just a celebration, just a tip of the iceberg, where I think a lot of more things go once the deal is very much clear with respect to sector specific, or the deal which how it moves on going forward. Obviously, today all the sectors broad-based momentum is there. More on the export side, I think textile, gems and jewelleries, auto ancillary stocks, IT as well as pharma, they are doing really well.
Prashant, after this spike,
I don't think one should buy at this point of time. I think there should be some kind of cooling time to the markets. So the markets were expecting 1,000 points plus, but now it's trading almost like 600 points. So I need to wait and watch and read the report very clearly and then take a point on investing.
Right. Karan, I want to come to you. There are some caveats mentioned in Donald Trump's social media post. He said that, India has agreed to buy more American products at higher levels. $500 billion worth of, trade is what we have, agreed to do. Of course, there is no clarity from the Indian side as to what really has been agreed and what has not. Give me an understanding of how do you read some of these caveats that have been mentioned.
So let me begin with agriculture, because I imagine that would be a big contentious issue today. I don't understand what the issue really is on agriculture and why we were reluctant, because even pre-trade deal we do buy a lot of American agricultural produce. Almonds come from California. We all consume it. We all love it. Walnuts, pine nuts, raisins. India buys it even today, right? Even with 50% tariffs. So if at all we have to buy certain agricultural produce that we don't grow in India, that wouldn't be a bad idea. That would actually benefit Indian consumers. On some of these items, tariffs are as high as 70%. So why should Indian middle class pay 70% to have almonds? We have had our elders tell us that we should have almonds every morning. If you can reduce tariffs, I think that's a good thing. That's not necessarily a bad thing. So that's on agriculture. So I think that there is a framework where we can increase our purchases by reducing tariffs for existing products that we are already buying. That will not be very disruptive, and at the same time would ensure that we are reducing our tariffs and kind of encouraging purchase of good quality agricultural produce. The second thing is oil and energy. There again, I kind of want to refresh our memory. During the first Trump presidency, US had become a major energy supplier to India. So it's only post the Russia-Ukraine war that we started buying a lot of oil from Russia because of discounts or high oil prices. Now international oil prices have also cooled, and therefore if we get a better deal, I see no reason why we shouldn't be buying American oil produce, or even the Venezuelan oil if it's cheaper. So those are some of the issues which would of course become contentious issues. But in a trade deal, there's always give and take, and we have to buy stuff. We anyway need to buy for our energy security. We need to buy a lot of oil, natural gas. So why not do it from the US if it helps us get a better trade deal in the process. Regarding the 500 billion figure, I think people are misunderstanding it. They're looking at it as like one number that we have to kind of pay or something like that. But it's a question of trade, and when it comes to trade, you want to be ambitious. We should be ambitious enough to have $500 billion of trade of India and US, in a stipulated period of time. And as our economy becomes large, maybe we'll get to that point. Maybe we would be doing $500 billion worth of annual trade once our economy is large enough. There's no there's no timeline on by when you would want to achieve that. But as you grow, you would want to have those high aspirations, and I see nothing wrong in having those aspirations.
Okay, Prashant, I'm coming to you also. One more, understanding as to how should one be really dealing with these export-oriented sectors. So far in 2025, the narrative was buy domestic sectors. Those will keep you safe from any external shocks. Will you incrementally turn positive on the export-oriented sectors now? Is it comfortable to include all of that in investment portfolios, textiles, chemical stocks, auto ancillaries? A lot of them have huge exposure to the US as well. IT stocks, for that matter, that have so far been an underperforming sector as well. How would you look at all of these sectors?
I think sectors like textile, IT, as well as chemicals, I think these are the sectors were almost beaten down sectors, and I think valuation giving some kind of comfort level for me as a fundamental guy to relook to them, considering the earning visibility again, because earning was one concern for every sector as well as these export sectors. If this deal gives some kind of good boost for earning visibility, I think one should have a wait and watch to see again. Today's rally is not a right time to buy again, but yes, obviously the cooling down period will be in next 2-3 days. So then we will have a good deal to have some kind of good stocks in these sectors like textile, gems and jewellery, as well as chemicals, and IT stocks. So I think all are near bottom, but yes, I'm waiting and watching for a right price to buy.
Right. Karan, to you, I want to understand, could this meaningfully improve India's competitiveness versus countries like Vietnam, Mexico, China, Bangladesh, Indonesia for that matter, in the US market? And also, do you see accelerating the China plus one shift, the global supply chains towards India now?
Obviously, yes.
I think
no, that's Karan.
Okay.
No, that was for Karan.
Okay, so my own sense is that as long as you have a 15% difference between the China tariff and the India tariff, you are competitive, because none of the other countries have the scale to kind of match what China can do for the US. So that scale, unfortunately or fortunately for India, is only with India. And that's probably the reason why China plus one really needs India to succeed, because without India's success, China plus one would not succeed for any of these firms. So at some level, this deal with 1% advantage over our competitors is keeping in mind the larger kind of objective of diversifying supply chains out of China. Now, it is very possible, as we all know, trade deals are negotiated and sometimes even renegotiated. So we don't know if the 15% difference between India and China would in fact be 15%, would it be 20%, would it be 30%, or would it be 5%? So because there's again negotiation going on between US and China. The bare minimum that we would need to be competitive and be a viable destination, I would say, is about 11. 15 puts us at a very comfortable stage for all sectors. At 11, we are competitive for most sectors. Anything below 11, and then that's when we have to do a lot more domestically in terms of reforms to make our firms competitive.
Okay, Karan,
So it all
just
boils down to different.
yeah, Karan, just last question before I let you go. I know that you have to leave, and I want to understand from you, what is it that you would now wait and watch out for in the fine print once the executive order is signed, once the documentation is shared between both the countries, and that's when we get to know what exactly is in the fine print and what exactly is the true deal. 18% blanket, or is there any question marks over some red line sectors that both the countries had? I want to understand from you, what would you really wait to watch to find out whether it's a win-win deal?
I mean, I think if we get 18% for textile, gems, and jewellery, and some other sectors, that itself for me is a win-win, right? So I think as long as we get those couple of important sectors in there, we should celebrate, because anything coming down from 50 is a big win. And if you talk to some of the guys who work in export oriented textile sectors, they will tell you how rough they've had the last few months. With whatever little support they had, they still had a very hard time. I would look at what concessions we have made, not because I'm kind of particularly interested in seeing what is it that we are giving to them, but more because those are the sectors where our firms would eventually be forced to compete and become much more efficient. So that's the reason and motivation to see what concessions we have given. I would like to see if there's any investment discussions in the trade pact, right? Because some of these deals have had investments either into the US or by the US. So that would be another interesting thing for me to look out for. But other than that, I think there's not much that I'm, kind of hoping to read in the fine print, because these deals have been negotiated for over 6-7 years now. So whatever was there in the India EU pact, I think this would be very similar. What would be more consequential is India joining the supply chain initiative. I think that now is more critical for the China plus one, and for India to be that plus one in the China plus one.
Fantastic. Thank you so much, Karan, for sparing your time and for sharing all those wonderful insights with us. Of course, we'll be touching base with you yet again once more details trickle in onto this deal as well. Hope you have a great time. We'll connect with you very soon. Thank you so much.
Thank you so much, Sakshi. Thank you.
Thank you. Prashanth, we'll come to you now. Out of all the sectors, we're talking about textiles, we're talking about chemicals, we're talking about gems and jewellery, auto ancillary. Which one is your favorite among the export-oriented sectors at this point in time, which gives you both the comfort of valuations, like you were pointing out, as well as the best placed opportunity to play this deal?
I think IT and auto ancillaries, these two stocks are in my radar right now. I think in the IT space, we have discussed many times the way IT have underperformed, and they are waiting for the great deal with India. So I think IT mid cap would be a sector stocks which I would like to focus more on, like Persistence, Emphasis, as well as Coforge. These are the three stocks which I am very much bullish on with respect to once the deal is very much clear for Indian markets. And again, auto ancillaries, I think Sona, BLW would be one stock where they have highest exposure to the US. I think there was some kind of beaten down stocks in the recent times, so that is also one stock one should focus more on. Yes, these two stocks. And in pharma also, obviously we get some kind of clarity, and even we have discussed many times with respect to granules, which is our favorite pharma stocks in this space. So these are the three stocks, few sectors and stocks which are very much in line with our universal play in the markets.
Okay. Prashanth, now tell me, what else is the market waiting for? We have most of the overhangs now done and dusted, the markets were down and out for some time in 2025. We did not move anywhere. Barely just a 10% move on the Nifty is what we got. In the month of January alone, Nifty slipped by about 4%. Of course, this 2.5% makes up for some of the lost ground there in February. The budget, of course, has come out with long-term visionary announcements when it comes to some of the sunrise sectors, but the markets took a beating because of STT. What else is the market really looking forward to? Do you think most of the bad news is now on the back burner? Things will only build on from here, and are good times returning on the D Street?
I think yes, all bad things have been almost clear right now with respect to all the uncertainties. Now things are on certainties with respect to growth coming back to Indian markets, earnings coming back to Indian corporates. capital flow which was missing from last 18 months, where FIs were continuously selling every day and day out. So I think these are the three points where markets should be looking at the way how FIs and FPIs and FDIs will look at these deals, and they focus more on Indian markets. Again, earnings, obviously, when we say it is almost missed from last 3 quarters. Even the third quarter is almost neutral kind of earning growth when we see the consolidated numbers for every stock. So I think earning has to pick up. I think this will give a lot of clarity for Indian markets, and where Indian markets were trading slightly on a very comfortable valuation right now in terms of mid cap stocks, small cap stocks. After the recent correction in the mid cap and small cap, almost 30-40%. So valuations are comfortable. There should be a visibility in terms of earnings, and I think government has done really well with respect to their capex in the budget, almost 12.2 lakh crore, which is giving some kind of good visibility how government is supporting towards the capex of Indian corporate growth. So all things are done right now. Earnings has to pick up. Capital flow has to see how Indian markets will see in the coming very few days.
Right. So, Prashanth, let me just go through the markets also to help our viewers. Where do we stand? 25,770 is where we are at. Remember, we opened higher and we did see some profit taking right at the top point as well. We are still holding above 25,770. All the sectors are positive. Real estate sector is 4% higher. Financial services 3% higher. Pharma up 3%. Small caps, mid caps also higher by over 2%. We have the metals, PSU banks, IT, oil and gas, FMCG, all of them up and about. On the Nifty, we have Adani Group stocks soaring. Look at Adani Enterprises now in double-digit gains, 10% higher. Adani Port 7.5% higher. Most of the group stocks are higher here as well. You're also looking at Geo Finance, Indigo. We're looking at Bajaj Finance, Eternal also pulling up in trade as well. Among the large gainers on the broader markets, you will see KPR Mill about 17% higher, SP Apparel. So all of these textile names, Gokaldas Exports 20% up, Indocount up 20%. All of these names are higher as well. So let's try and scout some opportunities here in today's trading session as well. What do you see in the Adani Group stocks? Why are they reacting, and where do you see the opportunity existing in the Adani Group stocks first?
I think Adani Port can be one stock where the import volumes can grow going forward. The way we were dealing with the lower growth in the Adani Port. So I think that will be one stock in the full group sector one should focus more on. Again, Adani Enterprises, because of a lot of companies are getting built up in the one sector, and going forward there will be a lot of demergers or relistings of all the small industries which are in the enterprise section. So one focus, Adani Port should be one stock. It should be a portfolio stock, not a trading stock again. It's a great opportunity to have that in a portfolio. So that is one stock one should focus more on.
Okay. What about, within the textile space, which is your favorite name there, or do you have a pecking order?
I think, we're not tracking textile as a sector, but again, as a sector, there will be some kind of good jump. Gokaldas Export can be one stock one should focus more on, but we don't have any textile coverage in our portfolio.
Okay, what about auto ancillaries, and auto stocks as well? I think Tata Motors has a huge exposure by way of JLR in the US. Even in the ancillaries, we have Samvardhan, we have some of the other auto part companies, even tire companies for that matter, that export to the US. How would you look at auto ancillaries?
I think Sona BLW can be one stock one should focus more on. Their overall exposure to the US markets are almost like more than 50%. So there will be good visibility for those sectors. And with respect to Tata Motors, you rightly pointed out, after the demerger, I think PV was a sector which was underperformance, and most of the revenue comes from JLR. So there will be good clarity how the global uncertainty is clear now. I think there will be good comfortable growth going forward. So Tata PV can be one stock in the automobile sector.
Okay. What about chemicals? Are you looking at that aspect as well? I mean, I think Aarti Industries is up by about 11%. Some of the other names like SRF, UPL, anything that catches your attention?
I think in the higher export side, UPL would be one stock one should focus more on, because 25% plus is a direct exposure to the US. So there can be some clarity about the export opportunity and the visibility in terms of growth.
Okay. Let's also talk about gems and jewellery. Anything here that you will track?
I think there is a more story of domestic consumption only. So again, Kalyan Jewellers can be one stock one should focus more on.
Okay.
And I don't think any good export-oriented stock will, because the way how gold has moved down. So domestic story is more story one should focus on. Kalyan is a favorite stock on that.
What about marine exports? Are you looking at names like Apex Frozen Foods or Avanti Feeds? Any of that has some opportunity?
I think all three stocks will be in focus. Obviously, the higher focus towards the US, and Waterbase has again 40% focus on the US, and Avanti Feed has almost 15-20% exposure. So obviously in this rally they have just celebrating right now. I think going forward how the export will grow and the volume will grow, and we need to see how real tariff will impact their growth in the global market. So overall the focus is very positive.
Okay, let me talk about the large cap names. Reliance Industries up by 4.5%. How are you looking at it? Reliance already had been announcing that yes, they will be buying Venezuelan oil. Now more energy imports could happen from US and Venezuela both. How are you looking at Reliance?
So Reliance will have some kind of limited upside from the current levels, because we need to wait and watch how US oil will be priced to India. So I think that would be one time when there will be good clarity on the import of oil. So for the Reliance, the upside is very limited. I think other stocks which are like IT focused, I mean that should be highly focused, because Infosys, TCS, these can have some kind of good clarity in terms of visibility in the short term as well as long term growth.
Okay, let me also ask you, when it comes to the FII positioning and the FDI flows, that India has been eyeing at this point in time, how would you look at those things change? One, both of you were pointing out as well, Karan also pointed out that the rupee is improving as well. That also kept a lot of FIIs away, the FDI inflow away. Now that seems to be improving at this point in time. We are also going to be seeing a change in the interest rate policies, the central bank policies in the US Fed. With the new nominee now coming in, how would you really look at where the money flow will be, how the money flow will be? FIIs have pulled out 40,000 odd crores in January alone from us, in the cash market, over and above the 3 lakh crores that they had pulled out already in 2025. How will that fact change?
I think with this clarity with respect to the deal between India, US as well as India and Europe, so I think they will be rethinking, renegotiating with their portfolios and try to come back to India at this point of time. I think valuation wise they are very much comfortable right now, but one thing which is the biggest concern, they need to wait and watch for the earnings growth. If there are some kind of comfortable earning growth at least for the fourth quarter, so they will be back in action in next financial year.
Right. I have to also ask you, Prashanth, a lot of our viewers would also have the question of what to do now between your asset allocation between gold and silver and equities right now. So far, all across in 2025, it was gold and silver that outperformed like anything. We did see over the last couple of sessions a sharp cool off coming in both gold and silver. We were already discussing that yes, they are in overbought zones, but this is like only catapulting higher. We did see a crash coming in, a stabilizing of both gold and silver last evening. Today also they are slightly higher in trade, coming back to a sensible level. How are you looking at what should investors be doing? Buying more gold and silver at this point in time, or deploying afresh into equities?
I think equity is the favorite stock for us. I think that should be highly focused more. But again, the FOMO effect of not getting into gold from the recent rally from 1 lakh to almost 2 lakh. So I think that FOMO impact will come. I think the way the correction has come from the top in silver as well as gold. So there will be meaningful phase-wise investment in the gold. But again, if once the uncertainty has been totally clear, so Indian markets, Indian traders like equity a lot because they know how these have performed historically. So I think more weightage will be on that, but again, there will be starting allocation of some part of their portfolio, at least 10 to 15% can your portfolio should be allocated to direct or indirect gold and silver portfolios.
Okay, got that. All right. On that note, thank you so much, Prashanth, for being with us on this special edition and sharing with us all your insights as far as this big news development has come in. As a positive, US-India trade deal seems to be done. Both the premiers of the nations, US President Donald Trump and Indian Prime Minister Narendra Modi, have tweeted about it, have posted about it on social media, saying that yes, a deal is done. US has agreed to reduce the tariffs on India to 18%. Karan Basin, economist, joined in and he said, I would have been okay with even 25, and just the removal of the punitive 25% over and above would have made things better. But 18% is a sweet surprise is what he says. And at least in 3 sectors, textiles, gems and jewellery, if we continue to see this 18% continuing, of course the granular details will be following this entire week. But if it stays in these critical sectors that export the maximum to the US, things will be better off for India's export-oriented sector. Although he does believe that it is not too bad a deal in case whatever we are importing so far from America, be it even in agri space, selective space, if we agree to reduce the tariffs to create a more friendly US and India trade deal, even going forward, creating more room for further reduction as well, that would augur well for the Indian economy and the exports at large. With that, viewers, we wrap up today's session of What's Hot, but throughout the course of the session today, we will continue to decode the impact of the India-US trade deal and what it means for you as a consumer, as an investor. Stay tuned for that.